happen in Kenya, right? There's something there. It will happen. It's happening. This is a problem that we have, right? The advantage is what they're not telling you. The advantage is my $1 or my $100,000 2 years ago would not give me as much as now. See, the advantage is my $100,000, I can have 150 million now. That's the advantage. They're not telling you that. The disadvantage is when that 150 million provider then goes to 250 million. Let's see.
So let's see. Some of them have done economies. Two things are happening. Some of them don't want to stay. They don't have a long-term plan in diaspora. So they want a 50-50, like you said. And most of them are likely between the age demographics of about 50 to 70. They don't want to retire abroad. So whatever they want to do now, somebody actually told me that the interest rate on the fixed deposits that they have in the UK is almost non-negligible. He doesn't even have £1,000. He said he doesn't have £2,000, but £100,000.
Yeah.
So it pays him to bring the money, even if the acquisition is negligible, and then he's having future, even for his children, because he says he wants to have a root.
The application is never negligible, right? The application is not negligible. I'll tell you different kind of investment equipment. There's nowhere in the world everybody gets 17% on bonds, right? Or 19%. What was the Nigerian raising at? 19%. The last one, 19% bonds. That's almost the risk in instrument that can put their money in. They will not get that in the UK. They will not tell you that, but they will not get that in the US, right? I mean, lots. Let me tell you something for a fact today. If you put a property up for sale, this one I'm not saying it because I read about it, I've done it countless times. If you put the property up for sale, let's say in this location, I'm not overpriced, up for sale in the UK, another property up for sale in Nigeria at the same time, another property for sale in the UAE. You sell the Nigerian property faster. So good. So what are so investing in assets in real estate, what are some of the things that we're trying to achieve, right? To be able to convert your asset to immediately as soon as you want it, right? There are different times in which I put forward to offer savings usually. Because even when you have the buyer, completion time takes 6-8 months. In Nigeria, you can sell in 2 weeks and you're good. So I've converted to liquid, right? I've done FGM bonds, I have my 18% before you're completing it. Who gains more? Simple. You are doing so the client they try to trick you because they think that you're doing it wrong. You are able to say to them, I've granted an interest. Look, this is the best. It's not that I'm not doing it, I'm doing it, so this is the best place to do it. To invest. Property in the UK is cash. With good store of value, let me put it that way. Yeah? But if you're trying to, the entry barrier in Nigeria is easy, it's lower, number one. The entry barrier can quickly be created, yeah? In this place, the acquisition is faster. The only thing that is better, again, in the UK is rent, right? Because obviously it's a market that is actually very saturated and there's very few, the demand for rent is very high, demand and supply, right? But all of these countries, right, they have their own pros and cons. So this is the reason again that we are diversifying across geographical of investment. So you're diversifying inside the asset class, you're diversifying across asset classes, and you're diversifying across geographical window. So you're having assets, in England, in Nigeria, in America, based on pros and cons of different ones. very simple. And these are the things that we explain to them. And they must buy. So let me round up on this so I can move to other.
No, go ahead. Go ahead.
Eh?
We are enjoying it.
Thank you. So you have the apartment for cash flow, you have the land for capital gains. Kind of real estate that you can do in the world or in Nigeria. There are also commercial real estates. There are different kinds of real estate. In the US, people do what? Landmark, alright? Good. Commercial. But I think maybe in Nigeria, maybe commercial real estate struggle. I don't know because I've really never done a lot of it.
Thank you very much. Very quickly, with 50 million naira, is it advisable to just buy one apartment and lease it out for short-lived business, or you lease about 2 to 3 apartments in a very strategic location and then use it for short-lived business?
Come again. I didn't get the second part.
You lease out, like you rent an apartment, then you use it. You're not staying in the apartment. You're using it for short-lived business. Not just like one apartment.
So you want
like
to do rent to rent?
3. Yeah.
Does that really work in Nigeria?
Well, it does for short-lived, yes.
Did you get the question?
Yeah, I got the question.
Between buying an asset with 50 million naira, one asset, and then using it for short-lived business, or renting different assets.
Okay, so let me tell you, right? What I'll do in my own case, right? If it's me, I'm taking that decision. I'm not saying that's the perfect way to do it. I'm saying I'll buy. Why? Because rent to rent, Nigeria is proven not to have really worked. You rent an asset, you're trying to rent it back, short lets. First of all, the cost of diesel, cost of all of this thing will take all your money. You'll be able to. And the thing is, bro, one thing about owning assets. If everything goes bad, guess what? See the owner. And then the capital appreciation is still on it. So, but you're still the owner, right? So now this is what I'll do anyway. So I will say I'll probably increase my investment money to like 60, 70 million. I'll buy one asset and I'll try one with that rent-to-rent strategy. And I'll be able to make my mistake, do everything, see if I can perfect it and expand across, However, in the UK, it's a very wonderful strategy. They call it rent-to-rent strategy. And not all county allows it. But what you can do is when you rent, there's something they call HMO. So you can then you divide. You have like 3 bedrooms, so you sublet the rooms individually. There's no contractual or anything, so you can actually chase anybody else at any point in time, and then you make more money. In the UK, it works perfect. I've seen a lot of my friends do it, but in Nigeria, I don't think that strategy really works. Right? So if that's me, if I'm going to do it, I was saying something. So I was saying about commercial real estate. I was saying that there are different kind of real estate. I remember someone sent to me a proposal on healthcare real estate, buy a real estate for hospitals, and make a lot of money. There's student accommodation. Student accommodation. Why do people not talk about student accommodation? Student accommodation is, the demand is insane everywhere. It's actually really never failed anywhere. Why don't people do it?
They do it. People do it.
What? With student accommodation. Yeah. These are things that when you make money, you should invest in. You know what he said? He said, what about if there is a strike?
They paid rent now. But they pay yearly, so it won't affect your money.
So that could be a strike. In every business, right? There's always at least one out of
All right, so when we had the last ASU strike in Nigeria that lasted for a very long time, we saw people selling off their flats that was close to a major university in Nigeria. And part of the reason was that nobody was coming and the buildings were going. I know if you have a property, you don't put it to use over time, it rates and all of that. So that could be, like you are asking why people don't do it. So that could be one of the reasons why people don't explore that.
Okay, good. My answer to that is, I think, and I believe so much in student accommodation, I'll still do it. There was one time we launched something around, in Ife on student accommodation. We couldn't go on with it because the cost of construction became very crazy, all right? And then since then, I don't think I've actually really developed so much interest. So when I develop interest really in it, I'll do it. I like it. I think it's a very good way of generating constant cash flow. And it has worked everywhere in the world. Beside, even houses beside universities in the UK are like, very much high in demand than houses, just in any place. So I think it's part of something that you should invest in as realtors. And then it's what you can suggest to your client to put in their portfolio. Now, let's do a little exercise, right? I'm a client, right? I'm a client right now. And I'm saying, Cynthia, I have 1 billion, right? That I've now heard that the Nigerian stock market is, it's doing really well. And then I want to invest in stock. I also want to invest in real estate. I heard about it, so no, I heard about compound advantage. Please help me allocate my different asset classes. What are you going to do? What are the first things what are the advice? Advise me. Tell me.
Okay,
tell
with
me
1
everything.
billion naira. Right?
I have a 1 billion naira to play with.
Okay.
1 billion.
So if you have 1 billion and you want to diversify your portfolio, so you do % on stocks, right? And then that's like 500 million. And you can now do your real estate.
Remember, you don't advise people on what you know a lot about.
Yeah.
Good. Now, tell me.
Okay, so if I tell you to do it on stocks, I'll also give you the kind of stocks for the Nigerian market that you'd invest in. Okay, there are some stocks that are, very, you can trust them, value stocks. We talk about the banks, the Fugas, Zenith, UB, and the rest of them. Okay, they've been there for a long time. Yeah, they pay dividends as well. And like you said, the growth in the stock market for the past 5-6 months has been really incredible. So I will tell them to do those ones. There are a few others, apart from the banks, right? So when they do like 500 million on those stocks, those value stocks, they can do like the rest of the amount into real estate, like buying lands and then apartments. So because...
How many percentage of the money would you tell me to put in lands?
In apartments, I will ask you to do like 30%.
In what? Lands?
Lands and houses, like 300 million.
Why?
You have it. Okay, so because they appreciate, they are medium risk, because you cannot liquidate to cash immediately, right? If you want to sell your land or apartment, you don't have to do it immediately. With stocks, it's not immediate, but it's faster. There are brokerage firms all over the places. There's wealth.ng. There's some of them that you can sell immediately, right? In 2 hours, someone will buy it off you. So those ones you can easily liquidate and get your cash back.
Good. So my 200 million that's left, what would you do?
Yes, okay. Personally, I would advise you to invest into high risk, whatever, maybe.
Stock is already high.
Okay, so the 200 million, you can just use it and do some rent, some cash businesses, anything. I don't know.
Do you agree with the investment strategy? Were you even listening? You were not listening. Who said no? I need someone that said no.
Yeah, I said no.
Good. Tell me why.
Well, okay. For me, I think I will start with like stocks. So, and the stocks will take like 200 million. Then I will do building 400 million. Then for land, I'll do.
If you say building, you have to be more.
Okay.
You should tell me what kind of.
Probably like about 4 or 5. So, That will take another
Like
400.
apartment buildings.
Apartments. Then my last one will be land banking. 200.
What?
Land banking.
What's land banking? That's
You're putting
stuff
your money-
that you people do.
Yeah.
For
You're putting your money aside for like a year. But you will still get your cash. You will still get your cash back at least at the end of 1 year. At 35%, depending on what you want to do.
Come
That's
again.
what I would advise you.
Come again. Start from the beginning.
Okay. The first one is stocks, which is 200 million. And the building is 400 million. Then lands will be like 200. And for
Why
land
did
banking,
you choose land banking?
No, because that's okay. All right. Why I chose land banking?
You know
is
what they call
because-
land banking?
I know what.
Eh? Land banking is when you give someone your money, a real estate company. Wait now, let me explain. Eh?
Okay, go ahead. Let him go ahead.
10 minutes.
Can I define land banking?
Streaming live on YouTube, so I want to announce the class and then we want to launch it. So we don't need you to write for like 5 minutes. So the class can see. We are live on YouTube.
That's bad.
Okay. Can I explain the land banking, please?
I think I just got that. Should I announce? Okay, great. Wait, that land banking you're talking about, is it that one that you people do that some companies?
That is buyback.
No. Okay, sorry. It's cashback land banking.
Oh my God, you're confusing me.
When you're putting your funds aside
That's
for like a
buyback
year,
scheme.
and you get
Wait.
35%.
Okay, one house. So there's one that I usually always see that has like a chart.
That is
Down.
cashback.
Eh?
Cashback.
That is cashback. Land
That
banking
is
is
short
different
term.
from cashback.
So first of all, if you tell me about that, I will never invest any of my money with you again in my life.
Oh, it depends on you. That's what I
Good.
advise my
Let
friends,
me-
and some
see,
of them have done it
I want
already.
to tell you something. I want to tell you something today. Let me tell you something. Let me tell you something today. What-
He's the queen. He's the queen of the buyback. Buyback.
Okay, so let me tell you, right? I'll start from telling 1 house. Can we have 1 house? Right?
One house, please.
Good. So
Dear executive, sorry, Mr. Adintola. You are live on YouTube, just to let you know, and we are streaming. You are streaming live on YouTube. You can see yourselves. So just go on YouTube and type Veritasi Homes, and then let's have enough engagement on that post. That's your class live on
what
YouTube.
would I write? Let me give you my board. I really want to explain.
Thank you.
So it won't look like So first of all, I'll tell you. If I come to you and say that I'm launching an instrument, because whether you like it or not, that particular thing that you're buying is an instrument that promises 35% returns annually. That means as a company, because I have operating expense, I have admin expense, I have different, I should in that same company do me to be able to give you 35%. As the company, we should be doing 50%. Correct? Correct. That's when it makes sense, right? We should do 50% profit. Then that's when I can say, 35% to, on that particular instrument, so our investors can go and smile. However, now, I've been doing real estate for a lot of years. Companies, I've consulted for a lot of companies, and I know some of these companies very well. Not only in real estate, right? Even when top companies, the growth companies, all of these companies, they never put any instrument out. They never ever go and check it. There's no top company that ever put any instrument out promising 35%. So one thing that you must be saying to me, you must be saying that people there in that same company that put 35% out are doing something that we don't. Look, there are metrics to these things. If you tell me that you have 1 billion, you want to do development, you're buying this land, you're buying this infrastructure, I can tell you within, with back of paper analysis, how much you're going to make as profit. If you're going to make profit anyway. And I tell you something that looks like a joke, but it's truth, right? Real estate companies don't make a lot of money from houses. In fact, houses less than 10%. They've been making less than 10% for the last years because of constant inflation, and devaluation, right? And some of these things that people take money from a project to do another, project. And then, when you're so desperate and you have to complete a particular project, you launch any kind of instrument, you call it 40%, 50%, such that you get money in to actually keep the game moving. If top companies cannot boast of 35%, the 35%, they have this what they, top real estate company, top any company, because if they can do 100%, they're not dumb. They will come to the market and give you an instrument of 35%. Let me ask you a question. If Zenith Bank comes out and say, we're doing at 35%, and another company that which company would you take your client to? Is that
Zenith?
Or any of the Fugas, or whatever, or Bua, or Dangote. But if Dangote is raising money at 7%, they are not greedy. They're making 100%. They'll raise to 20%. Why? Because there's always competition in that same market, in that same raising market. This is what I told you. Raising money at 17. But the government, that same market, 2% higher coupon than us. And that means we raise money. So there's a same. Do you understand? So if they can make 100%, the market raise money at 35%. Nobody is making 35% in real estate construction. For a fact. Now, for the last years, the only place they make that amount of money is in lands. Right? Is in lands, right? However, right? The risk on land, because of different kind of, in Nigeria, if you launch 10 landed properties, I can tell you from experience that 3 or 4 of them would have issues, meaning that the 6 you have to use to manage the whole 10, right? And I can also tell you that all of the things that you've promised on infrastructure, all of the things, if you actually would do it, you will not make a 35%, unless you will not do it. Again, numbers guy, this is what I do. I do it, like I check my own numbers myself, right? You will not do it. So, if anyone comes to the market with 35%, 45% raise, I can tell you the estimated failure time of that particular instrument. And I can tell you that it's almost a Ponzi scheme. And I'm serious. 5%. Are you people joking?
MBA Forex.
50%.
Yeah.
Actually, I'm running something for a company that is doing. Sorry, Dollar.
See, right? When you want to prepare a portfolio for your client, I don't want to go too much on that. I don't want to go too much on that. You're an asset manager in your own. One of the reasons why people will always come back to you is if you prepare a good portfolio and if your client feels like they're satisfied and they make a lot of money, they come back with their friends, right? The way people are, if people have made 1 billion, on the 5th investment, if they lose 200 million, guess what? They will say, why? People forget. People forget, right? Good. So, despite the fact, but there are business failures, right? No business plan would fail on paper, right? So, but if you tick all your boxes, you do all your research, there are what do we call it, to advise your client to invest in an asset. If it fails, we all can say it. You can even claim because it's macro, Macro is Nigeria. It's not microeconomics. It's what happened. Look, I told you to do this, but look, The dollar is now 1,005. The developer, everybody see it, right? But the investor know that you have ticked your boxes. Don't walk blindly with your investors, holding your investors into a ditch. That does not make any sense. You understand? So I would have agreed with your investment strategy. It was getting really, really perfect, you know. And then you mentioned land bank. And the land bank that I know is not by before now, land banking used to be then you people change it to for 50%, and I'm wondering like what's happening?
By banking, what they're talking about, land banking. Land banking is
It's land banking. They're talking about a different scheme. That's buyback. Different.
So we're still correct. Land banking is still what we think it is.
Yes.
So let's go with what we think we're doing.
Thank you.
You know, not what you people have turned it to. I'm not saying, again, every man, we're all adults. We can do whatever we want to do. I am saying that I will not invest in an instrument that promises 50% because there's no way to make it. So that means something is wrong. Even if I get my own 50%, that person will not get his own 50%. You know, there's no way. There's no way. Especially in real estate, there's no way. I know, there's no way. Because,
Do you then call off plans where client has given you his money for the next 18 months?
The what?
Off plans. He has given you his money for the next
but there's an
18
asset.
months.
Now, off plan, right? But there's an asset.
Because it's still land.
But there's an asset that is tied to.
The same thing with land banking. It's tied to.
You know what? This class is not about land banking. It's not even about land. You know, I can see the way some of you, are looking at me like, guy, you know, just, you know. But you know the thing is, I'm here because I love you so much. I'm gonna tell you the truth. However, you can do with whatever the information that I've given you today. Do anything that you like with it. You know, anything. We're adults, but I'm just telling you like the realities of things. You know, sometimes in desperate, difficult times, companies comes up with some of these things, and you know, and it happens. So let's go back. Let's leave land banking, right? So I was just,
Yeah, you did not
a
agree
quick
with
question,
mine.
please. My question is this: the current inflation, like as it is in Nigeria now, does it profit or does it take away from the profitability of real estate investment, and how, please?
Really, from the clients, from the demand side or from the supply side. Supply side is the developer, and the demand side is from the clients.
From the client side, yes. As the one I'm asking is it reasonable for me to tell my clients that with inflation?
So one of the advantages of real estate is that it holds its own value. It's a solid asset, right? It holds its own value. In fact, most of the time, if you notice, whenever the naira devalues, the value of the asset appreciates just to adjust to that particular devaluation that just happened, right? So if you, before they were selling land in Banana Island at 1.5 million per square meter, dollar went to 1,500. The naira devalues, they adjusted to 1.8 automatically. It happens like that everywhere. Even abroad, you know, when the Fed, even in the US, when they raise their interest, the real estate automatically just make sure that they adjust the real estate market to happening. So usually from the demand side, it protects. It's usually from the supplier side, which is the developer, that because you're locked in a contract, and it's almost always difficult for you to make sure that the contract is fulfilled. Do you understand? And that's why it affects. But yeah, these are how people hedge their money everywhere in the world. You know, you buy a place, you know it's hedged against currency devaluation, inflation, all of these things. And that's the advantage of real estate. You know, one of the advantages. So we're talking about the liquidity, how easily you can get quickly real estate to liquid in Nigeria faster than, you know, when it's abroad. We talked about the cash flow that you can get in Nigeria, in the UK. We talked about how rent is better there than in Nigeria because obviously for government policies and all. But Madam Lapa, can I ask you this question? So there's a client, this is the last question I'm going to ask on real estate before we then move to the other one. So a client comes and says, look, I've made my 2 million USD, right? I want to invest, you know, in real estate. I want to invest in bonds. I want to invest in stock. I don't care if it's Nigeria. I can invest anywhere in the world. You know, I want a portfolio that's balanced, right? Give me cash flow, capital appreciation, also with some near liquid instruments and all of this. What are you going to tell that client? I'm the client now, tell me stuff. Yeah.
Age. So if I'm looking at you, I'm going to look at...
I like that.
So if I'm looking at you, I'm going to look at quick turnover and cash flow.
Good.
So I'm going to look at the 2 million, and I usually have the 30-30-50 principle. And that means that I'll take 30% of what you have into the currency of where you are right now. I would say 50% actually of what you have and put it where you are. So I'll take it that maybe you're in UK, for example, and I will spread it into apartments for rental purposes and lease. But preferably, I will look for areas in the UK that are near students' accommodation, university towns, and all that. I wouldn't take anything. I'll probably put something in the Euro bonds and the share market in the diaspora, because that is quite, especially America. I'll look at bonds. I'll take, and that's another. You do like the US Treasury. Yes, I'll go there a bit. But no, not Treasury. I'm going to look at the stock market, because the NASDAQ and all that, I'll try and look at what is performing well. Things like Netflix and all shares that will give you high yield quickly. Then I'll take part of that, another maybe 30%, if you are a Nigerian, for example, and invest in prime areas in Lagos, that you can turn those apartments, shortlets, and use them in the short term to make more money, and there'll be an appreciation. I would not advise at all that you buy a house to live in for now, because you're probably itinerant. $1 million.
What if I tell you that I don't have a house anywhere and I'm now floating?
That's why I just finished by saying that for you, you're probably itinerant.
Okay.
And you probably want a highbrow apartment in Oniru, Banana Island. Kind of that kind of person would not want to live anywhere else.
I'll say something. Not before I asked Taiwo. Taiwo, do you agree with Madam Black's investment strategy?
Yes, I quite agree with that, especially the part of buying locally. I believe first in the local market. You want to test what the local market is saying. And for UK, for example, you can look at apartments, not terraces, maisonettes, and what have you. Some people that even have structures like maisonettes, they convert them to apartments, such that they give out one room to one person, another room to another person. So, and also on the part of buying into bonds and all these other instruments, I also subscribe to that. Then, coming back to the Nigerian market, I believe the apartment part is where people will make a lot of money, because there is high demand for apartments. Thank you.
Thank you so much. Okay, so I'll tell you something before we go up. I think what's the number one thing, thank you so much, Taiwo, thank you. The number one thing that investors look at when they try to invest in new country, the only reason why I mentioned that example of if someone is investing in Nigeria, let the Naira remains and deal with Naira, is because they are Nigerians. See, if the person was in South Africa, I would not say the same thing. The first thing that you look at when you're going to a new country that is not yours is how you repatriate your money when you have invested and made money. That's the first thing. This is the reason why it's difficult for investors to come to Nigeria, because they cannot repatriate their money, right? So a lot of money, you've seen all of those backlogs that they're clearing, these are forwards that's been taught for a long time ago, right? So if you're Nigerian, right, and I'm telling you, oh, I have $2 million, I've settled, then the first thing you should look out for me is which country, even if there are investments, there are wonderful investment opportunities there. If I put money in this country for this guy as Nigerian, when it's time to take our money, our investment, how easy can it be? How easy is it right? In Dubai, has anyone ever tried to take money out of Dubai? It's insanely hard, unless you use it to buy another thing in Dubai, or unless you spend it there or something. To do like a wire transfer or something, it's just very hard, that's an example of what you should look at when you're trying to go into all of these new countries, right? So when you were mentioning U.S. Treasury notes and stuff, which are good, to be honest, and to be honest, it's a bit easier to repatriate money from the U.S. However, I want you to always, when preparing, you said that the U.S. bonds, correct? Okay, I thought that was what you said. All right. So again, let me tell you again, what's the reason why we want to invest in the first place? So that we can make more money, optimize our profit, reduce risk. If you make the money, what are you trying to do? Do you just want to make the money? You're trying to buy comfort for the reason why, right? Since some people say money cannot buy happiness, but you can buy comfort. Then when you're comfortable in something, you can be happy, right? Good. So there has to be a goal, right? Why am I investing? I'm trying to invest. I'm just trying to make money. No, I'm trying to invest so I can make money to be happy. I'm trying to invest so I can make money to buy a Rolls Royce. I'm trying to invest so I can make a lot of money to create my own foundation, impact people. Never, ever, ever forget the goal, of your investment. Never, ever forget, And what did you say? You want to say something? The why. The goal of the investment. It must be there. So I'm trying to invest. I'm trying to make more money. I'm trying to optimize my profit. Not because when I now make that money, I want to be able to do this. I want to be able to do it, and very necessary. And that's the reason why, when you then said that the guy came to Nigeria with $2 million, and you put all of these things in bills and bonds and stuff, and you've not really, arranged one small apartment for him, Niru, to live his best life, I was worried. But again, there's no perfect investment strategy. I like how you started, the age. How old is this guy? What's he trying to achieve? If this guy is old, 70-year-old, maybe I would just put the money in treasury bills, and say, look, the returns is enough. There's no risk. The return is enough to, sustain this guy for the rest of his life. Again, let's go back to real estate. So, buy apartment for cash flow, get land for capital appreciation, there's student accommodation that can be played with, commercial real estate. In the US, I was reading about prison real estate, and then, have you read about prison real estate? Yes. What? No, private prisons. Yeah. People make insane amount of money. Yeah. It's even very simple, because in this place like this, there can be like 18 beds, and then the states then pay the owner of the prison per year, per bed, per person. This is the reason why they go to bribe all of those cops in black communities to arrest black people for doing nothing, so that the prison can always be filled. Yes, now it's in black communities that they have like the prisons full. Have you ever seen a lot of prisons in white communities? No, there's a lot of investment banks, a lot of wonderful stuff in the white community, and they put prisons and churches and mosques in the black community because they know that you people. We thank God. Let's move on. So So am I allowed to leave the real estate side? Let's go to ETFs, and I'll just run so that I can leave. I'm sorry, I don't want to take a lot of time. Talk about ETFs, talk about mutual fund. So the difference that I was asking her then is, so when you say money market mutual fund, there's a lot of mutual fund. There are money markets, there are this one, that one, and all. So again, it's just like putting a lot of securities, right, in the bucket. So there's a saying, I think is, which book, how ETFs have been outperforming, a lot of exchange, a lot of other funds in different indexes for the last 40 years, right? So ETFs, so the difference between, how do I explain this? So this is Apple, this is Tesla, and this is Microsoft. Let's call them S&P 3, because there are three, yeah? So if I buy into Apple, I own a share of Apple. I'm part of the company, right? If I buy into Tesla, I own a share of Tesla. I'm part of the company. If I buy into Microsoft, I own a share of Microsoft. I'm part of the company. If I create a fund, right, that is a mixture of value stock, growth stock, large cap, I put it and I list it on an exchange, right? I'm trading it. When people buy, they don't buy into those companies. They buy into those funds that's bought into those companies. Yeah. Can you see? That's ETF. So you're buying into funds that's bought into those companies. It's less risky because if this one don't do well, this two will do well and cover up for, So the volatility is not that high, right? Do you understand what I've explained?
Yes.
Explain to me what I've explained. Explain to me. You said yes now. I asked that, you said yes. What's your name? Can you explain to me? Yeah? Why not? That means you were not listening to me. Yeah? Try.
So we have Tesla, Microsoft, and Apple. Then you bought shares into Tesla, Microsoft, Apple. You own a part of the three of them.
Great.
And then you created a mutual fund, or maybe not the right word, but you created something, and then people now invested in that one.
That means you people are not, you don't understand what I'm saying.
I do.
And then when people want to buy, they're not buying directly from the three of them. So one of them is having, maybe it's faulty. The two of them can cover up.
Can I explain?
Eh?
Let me explain.
Who is saying that?
Now. Me, here. Cynthia.
Okay, Cynthia.
Okay, this is an example. Let's say Veritasi Homes bought shares from Apple, Tesla, and Microsoft. And they bought the shares with $1 billion. And then they listed it on the stock exchange. And then every other person is buying into the amounts they use in buying those stocks.
Come again. I didn't get that. Come again.
Okay, so if you used $2 billion to buy stocks from these different companies and then call it something and list it, every other person who is going to be buying into that thing you called it is buying into the fund, the $2 billion you invested into this company.
Yeah, clap for her, clap for her. Yeah, nice. I like that. So very simple. Let me explain again, right? So there's an exchange, right, which you can list. The different kind of exchange in the world. There's the New York Stock Exchange, there's Nigerian Stock Exchange, there's Hong Kong, there's NASDAQ, Tel Aviv, all of this, right? Let's say on NSC, right? Or let's say on NASDAQ, right? We have carefully picked these stocks, this company for, let's say, an S&P 400 companies, right? If I buy directly into Tesla, I'm very open to the volatility of Tesla, right? I can either gain or lose. So my investment portfolio perform the way Tesla is performing, right? If I go straight directly to Microsoft, so what people then do, or what, I don't know, I remember what I do is to create a fund that carefully pick all of these stocks, right? They buy those stocks, right? They put it in a fund. They then list on that exchange, right? Call it Nola Fund, which is holding Apple, Tesla, Microsoft, right? So now you are being protected for not going directly to this place or this place and there. You're coming here straightforward. You're buying into this fund. The difference is because you are not buying into this, the risk is less. They said ETFs would always outperform. You might not have the amount of gains. Edging, yeah, you can, but this is just, I'm just trying to explain the difference between ETFs and, and mutual fund, right? From what? So one Buffett is investment, Berkshire Hathaway. It's an investment management company. They do a lot. They invest, they put in companies, they can buy shares directly, create funds also, and all of these things. Ask your question.
Yeah, so I think this is also another very good opportunity for real estate. And I think this can also be replicated with real estate too. Because I can easily just create a platform where we have like some investment in compound advantage.
So talk into your mind so that people can
Okay,
yeah.
like some investment around compound advantage, Chevron, pick like around 4 or 5 locations, the mid locations, and then pick like land banking options too, and create a product around there. Investors are like investing, they don't even know what they're investing in, and each of the locations can maybe do the cash flow, do the capital appreciation, and they still make their money.
You're correct. I think last year, I and some people in Veritasi, we created something like that, we built like a portfolio, we put some lands, put some assets, and then some people bought into it. However, because we put all of this portfolio together and it's real estate in Nigeria, you then have to sell to bigger companies that can afford it because it can run into billions. But we thought that it was a very good mix of, different properties that can actually, make you have a very good portfolio. But again, what we were not considering then is that it's now just one company, right? Which you then, you can then say that it's not, like ETFs again. Do you understand? So the risk is still, so I hope you can buy shares into Dangote Cement, you can buy into Dangote Sugar, you can, Dangote Fertilizer, and then the refinery is going to be listed very soon. However, they are still under Dangote groups. Do you understand? So, REIT, what he's trying to say is like REIT, but however, I don't want to go to the REIT because that's a lot of, explanation. So, so ETFs in real estate is like REIT. Actually, and again, I forgot to say that when people create these funds, they take it to the Security Exchange Commission, to make sure that, before they list it on the exchange. Anything that is listed on the exchange, anyway, go to the SEC of that particular company, right? And this is ETFs, and mutual fund is almost the same thing. It's just mixture of different securities, So you've put a treasury bills, government treasury bills, and different notes, and different, other asset classes in the debt markets. Put it in a mutual fund, and people then put. So you use the pool of money from different investors to buy all of those, right? So usually it will not be doing 19% that the Nigerian bond is doing, and it will be lesser than that, because we think that this is actually very high, very high, and it will be doing lesser than that, and it will not be doing. But what that is safe, again, is near liquid because it's tradable anytime. Right? And that's different between people. Also always say that, another difference is you can trade ETFs during the day, during the market day. You trade ETFs, and mutual funds you can trade anytime, because people go into the market at any time. You want to ask a question?
No, I'm trying to. So mutual funds are actually based on cash because they have fixed percentage, and ETFs are based on market prices.
Good. So they have obviously fixed income. It's like putting all of this fixed income together in a pool, and then you get the investors pool of funds to buy all of these instruments, and then obviously mutual funds they don't have fixed rates.
Okay.
They don't have fixed rates. Yeah.
They're also based on market prices. So, because with ETFs, for example, if you talk about S&P 500, you have 500 stocks.
Yeah.
Yeah, market prices can affect whatever it is. But for mutual funds, how do you now make your money?
So, for mutual funds, the reason, even when the last mutual funds were not able to know the amount of interest that we're gonna get. Why? Because all of this, because they're asset managers that manage it, right? So they do some instruments quickly. They take some into the, with different interest rates. So the only thing is they know that this is the investment goal of these people, and they're not trying to go less than this. So they dump some, with different interest rates. So I think it's the average of it that take, and they give the people. Do you understand? So it's different. What different instruments is You know, it's only when you go to that instrument directly that a fixed rate for it. However, when it's in the mutual fund, because it's 19, this one is 17, this one is 12, this one, it now becomes different rate and everything. And because they dump some, they bring in some, they dump some and they bring in some. You know, it makes it a bit, well, I don't want to go too deep into that because of all of that. So that's different. Let's, I know some of you do precious metals, some of you owed to gold. Who has bought gold, yeah? Who buys gold and trade gold, yeah? Huh? I said, is it online or offline?
Trading gold or just buying them physically?
Buying sometimes to hold as an asset class. It's also an asset class. People hold it. You don't hold any of those, you know. And obviously commodity trading as well. I've seen people giving me a lot of, you know, use more than my time. So let me just round up. So you have your money, right? You save a big part of it, and you save very good, you know. You save with whatever, a bank or in a place that's, you know, the interest rate is actually not or close to the inflation rate, so you don't lose the buying power of your money, right? Sometimes it's good to hedge. Hedge is when you then put it. That's what most people then do. That's the reason why US is very expensive, because all of us now lost belief, right, in the naira, and everybody try to run into dollar position because you think that the dollar will always lose in buying power. So you have your money, you either save by buying yours, which I'm not advising, but you try to save, trying to close to what the inflation rate of that country is doing at that particular period. And that can be, you know, where different kind of near liquid instrument like mutual funds and all, number one. Number two is you put, if you're very young, it depends on what you think is risky or what you think is high risk, high return. You put more of your money, all of your money in high risk, high return instruments. In our case, what I've described there is stocks. You buy good stocks, you know, in 50, 30, 20 ratio, just like what I've explained, right? And then you put a good percentage of your money also in bonds, right? I would advise that you buy corporate bonds and you buy also government bonds. It's good. That's, you know, that's when you buy bonds, treasury bills, they give you the interest, forehand, right? The first day, and then you get the face value, you know, at the end of the tenor. Also, I want you to know that the bonds, the bills and all of these are tradable at the secondary market. They're actually tradable at the secondary market. You can go on the FMDQ, some bonds, some corporate bonds, you go on the FMDQ, you trade it, some you go to your, and you trade it, right? And then put a decent amount of your money also in real estate. But don't rush to buy a house that you want to live in because you have listened to your mom and your dad because they want to come and, you know, see a big, beautiful house. That is liability. People that buy mansions are people that are already very rich. That's the goal of their investment strategy. All of these things that we're talking, that's the goal. And they've reached their own goal. And this is the reason why they're buying all of these houses. You should buy apartments. You should buy, you know, lands for capital appreciation, buy apartment, do student accommodation, do all of this. And you know, what again? If you know a lot about commodities, you can trade commodities. If you know about precious metal, you can trade. Right. ETFs and mutual funds are wonderful ways of investing because they are almost risk-free, you know. And then obviously, I know that your certificate of investment for your mutual fund, there can be, you can get debt against it. I also want you to put yourself in position that when you need emergency funds, you first of all liquidate some money in your emergency fund, right? But when you need more funds, you put yourself in a position that you can get debt. You know, rich people have used OPM to grow, to scale other people's money. So you have to put yourself in a position. So people say, when you go to the bank, say, look, come and give me money. The first thing they ask you is collateral. Of course, they ask you for other things. Do you have collateral? A lot of people don't have collateral. You should put yourself in a space that you have collateral, and your real estate portfolio can be your collateral. See? And then also, these are diversification. I want you to diversify across all asset classes that we have mentioned. I want you to diversify within those asset classes. I want you to diversify across geographical region. You know, for sometimes you go to a rating agencies, they try to do things for you, and then your company, I think the last international rating we got, it wasn't junk, it was good rating, but it wasn't investment grade. Well, one of the reasons why it wasn't investment grade is because Veritasi was or is only in Nigeria. To them, that's what concentration risk, you know, and there's concentration risk also in investment, meaning that if anything happens to Nigeria, then there is no Veritasi again, right? So if you put all your investment in Nigeria and anything happens to Nigeria, there's no. I think you need to read the story of what happened in Lebanon. The rich people, you know, they put a lot of their money in Lebanon, and the money become dung, nonsense, right? Some of the people that put a bit of their assets in Dubai and Jordan and all of these things are people that actually made it, you know, to the, you know. So I want you to diversify across geographical regions. If you can invest in Ghana, if it's South Africa, if it's, after I'm coming, if it's the UK, if it's all of this market. Again, which is the most important, right? Very important, very important. Some parts of your money should be dedicated into investment in yourself, which is the biggest investment, right? Invest in yourself. Buy a lot of books, you know, subscribe to Financial Times journals, HBRs, go to short courses for short courses in LBS, in Harvard, whatever. Put some part of your money into investment in yourself, right? Read a lot of books, you know, read, you know, business reviews, you know, go to where people are talking about great stuff, pay for it, you know, and do all of these things. It's going to directly, you know, affect your life and your, you know. Again, lastly, I want you to also invest in your health, because wealth without good health is nothing, right? Have you seen the people that make a lot of money? Time up. Okay, give me 5 minutes. Let me just round up. I don't think I can take any questions, but you can ask me when we're outside. And I'm so sorry because you know. So invest in your wealth. You know, go for checkups. You know, you work hard, you work a lot. Go for checkups. You know, have a personal doctor. Have an insurance. You know, that protects you, and invest a lot. So thank you so much for this opportunity. Thank you. Thank you.
Thank you, sir. Thank you, everyone.
Okay. Can we give of applause?
Sorry, last announcement. I like this book so much, right? It's one of the books that I've read that's changed a lot of things. I think you should buy it. It's called Investor 101. Michael Kagan. It's a good book, very good book. There's another book by Tony Robbins called Money. You know, talks about, you know, inflation, IPOs, stocks bought in different markets. I think by the time you finish this and that other one, I think you will not be in the same place. Please, thank you so much. God bless you.
Thank you, everyone. Thank you, Mr. Aditola. Please, we need 10 minutes of your time. It's a very nice time to take our group picture now because we have Mr. Nola, Mr. Toby Yusuf, the academic director, the director of custom executive education. These are the 4 key people that need to appear in our picture. So please proceed to the front of the building. We were thinking we could use this place, but the media people said it won't take all of us. Please, let's go to the front of the building. Special appeal again to my gender. The pancake is still intact. Please don't go to the bathroom. So you will not appear after we have taken like 10 shots and say, oh, I went to do my touch-up. Please don't do that. I'm looking at your faces. You are still looking peng. Immediately after the picture session, please let's go for breakfast. Thank you very much.